So we'll get started. Thank you, Terry. Well, happy October 1st, everybody, Tuesday. Appreciate everybody taking about an hour out of your time today to hear what I think is very important, because I know we deal with political contributions all the time. And I know a lot of our service providers, some of you are on the call now, whether you're engineers, public contractors, you're dealing a lot with government agencies, and it's important to know what is allowed and what's not allowed in terms of political contributions. And we're fortunate enough today to have two speakers. I'll start with Bill Palatucci, who I've known for many years at McCarter and English. Bill is obviously well respected, received many awards. I think he's on the board of one of our nonprofit members, Turning Point. But Bill, thank you for the idea, and it's a pleasure to introduce his colleague, Stephanie Olivo, who's been with McCarter and English now for 2 months. And it's great to have Stephanie because her previous career, she was the compliance director for the Election Law Enforcement Commission. And if you don't know ELEC, you should know ELEC if you make any kind of political contributions. Again, I do it personally for our PAC and also for my lobbying license, or registration, I should say. So I think what you're going to hear today is, I know the governor signed the Election Transparency Act. There was a lot of confusion as to whether or not it makes it more transparent. I'm sure we'll get into that, and really what the obligations are on you as a contributor, but also on elected officials in terms of what they need to report. So with that, I'll turn it over to, I guess, is Stephanie going to go right into it? Stephanie, or?
I'll do a little introduction,
Okay.
Tony, if that's okay.
Yep.
Well, really appreciate, Commerce and Industry hosting us this morning to do this. Have been, active with Commerce and Industry for many, many years, attended your events for a long time, and members of our firm at McCarter and English are our members. So we're very much appreciate this. I think Anthony's absolutely right. This is a great time to do this. The elections are upon us. You can't turn on the TV these days without seeing ads for either a federal candidate, somebody running for Congress, or president. And the entire, the New Jersey Assembly will be up next year, and we'll have a gubernatorial race. So I'm very proud to have helped encourage Stephanie to leave ELEC after a 10-year tenure and join us at McCarter and English. We talk to clients all the time who have different questions on federal elections, state elections. We at McCarter are happy to be Congressman Tom Kaine's FEC, Federal Election Commission compliance attorneys, as well as advising other corporate private entities on such matters. But Stephanie, I think, is a great addition to our firm. As Anthony said, anybody's had a question in the last 10 years, you called ELEC, you were talking to Stephanie. So she knows these issues inside out in terms of a number of different topics. And people think of, the title of Election Law Enforcement Commission is a little misleading. It's much broader than just elections. It's annual registration of any company doing business with the state of New Jersey. So there's a pay-to-play element to it. Any contributions from a CEO or a corporation to candidates or committees or independent expenditure committees in New Jersey. There's probably an Oprah piece to it too. Stephanie is very familiar with Oprah. So a lot of issues there. So we're thrilled to have her here. We've got a presentation. So I'll get out of the way and let Stephanie do it. But along the way, the chat box is up there. So we want to post a question, we'll take a question, or put up a hand, and we'll take questions. So with that, thanks for having us this morning. Let me turn it over to Stephanie.
Thank you.
Thank you. I'm going to try to go back to this and share the screen, but I have to go back. Oh, it was only the front slide anyway that I skipped through when we practiced sharing it. But thank you, Bill, and thank you, Anthony, for having Bill and I here for this particular update, essentially. And you're correct. The Elections Transparency Act was passed in 2003, and 2023 rather, and there were a number of changes. Whether it became more transparent or not, I think depends on the different changes in different areas of the law. So wanted to start with the business entity disclosure statements that are required regardless of activity, political activity. All business entities, any business entity that has a contract with government entities that exceed $50,000 for over an annual period of time has a filing obligation with the Election Law Enforcement Commission by March 30th of every year. It doesn't matter what changed in the law, nothing changed as it relates to that. And the magic number is $50,000 a year. So if you have any government contracts where you earn any money from contracts for selling goods, services, providing any kind of materials, if you exceed the $50,000, you are required to file something. Now, depending on, the type of activity you might have with related to making political contributions will then depend on the information that you'll have to provide on that form, essentially. Okay, I skipped another slide. So the slide before that, can anybody help me with that?
Yeah, you know what? You just hit the back. If you go back, your backspace bar, you should see the other slide.
Previous. There we go. So this is the other form that may be required to be filed in anticipation of entering into a contract with a state entity, and it is required by the Department of Treasury, and local purchasing agents and governments will require it before contracting. If you enter a contract that was not awarded through a fair and open process. And when that occurs, you have to fill out the certification. A business entity fills out the certification that outlines their business structure and ownership. The local entity or the state will not enter a contract that's over $17,500 without this particular form and then certification that is kept on file for 2 years with the Department of Treasury. It requires the business organization structure and ownership so that they can determine the individuals, the key executives, the owners, the directors of the business entity that have made contributions over a period of time, depending on the type of contract, whether it's a state contract or a local contract. And there's a period of time that they look back to see whether contributions were made that should have been limited that would then prevent the contract from being awarded. So you want to make sure when you're making political contributions from business entities that you're doing so knowing what limitations might exist for entering these contracts with the government. And when and if businesses change structure, directors, they bring new people on board, they have changes in ownership. This particular form needs to be updated so that it is a continuously accurate document that will the Treasury will monitor and make sure there's no violations to the limitations that are put in place. So those are the two forms essentially that the state will require related to entering into public contracts. What has changed? What hasn't changed with the Elections Transparency Act is a number of things. Reportable contributions is one of the things that actually has changed. So it used to be $300 or more, no, more than $300, I'm sorry, over $300 in contributions. If you made a contribution over $300 to candidates, any committees, those are reported in detail on these election law reports. They're required to be reported in detail, meaning the contributor's name, their address, their occupation and employer. So if any person, any entity makes a contribution, it was 300, now it's over 200. So that was one of the changes that was implemented where they sought to disclose more information. So they're capturing any contributions over $200 now are required to be reported when made. So that is a difference, and that is one of the things that will potentially mess somebody up in making contributions that could potentially then impact their ability to receive a contract unless it's awarded through a fair and open process. So the annual disclosure report that's required will depend, it doesn't depend on, but what is required to be contained on that report depends on the activity of the business entity. So if the business entity has not made any contributions over $200 during a period of time, they can simply file a short certification form indicating they have government contracts over $50,000. However, they made no contributions over $200 to any elected office or political committee or continuing political committee in New Jersey, and they only have to fill out a one-page certification form. If any contribution over $200 has been made in the calendar year, it requires a detailed report of all contributions that the business entity has entered over that past year, and any revenue they've brought in related to a government contract over that period of time. So there's a lot of work potentially that goes into filling out that annual report that's due on March 30th to include every contract, to outline exactly what entity awarded the contract, the details about the contract, the amount of money collected on the contract, whether it was fair and open. It doesn't matter. It has to be reported as long as there's any reportable contribution. Even contributions, sure.
And sorry to interrupt, Stephanie. Just have a couple of questions. I know I've been asked this.
Sure.
Let's just say you're an engineering firm and you don't have any contracts, but you want to give a candidate $1,000. Is there any obligation on that engineering firm to self-report that $1,000, or is it captured by the candidate reporting that contribution?
Correct. That is captured by the candidate. That is not required to be reported. If they made their own direct contribution to a candidate committee, that is not required to be disclosed if they do not have government contracts over $50,000.
Oh, how about if they do have government contracts, so then they just do an annual report, right? They don't have to do quarterly reports or anything.
Correct. If they are not raising funds to make political contributions, and they're just making a political contribution directly from their business or their key executives, they don't have to report anything except for the business entity report that we just talked about.
Which happens once a year.
Once a year.
Thank
by
you.
March 30th.
Thank you.
Mm-hmm. So even if the contributions wouldn't be prohibited, meaning or limited, so under the pay-to-play rules, the law seeks to limit the amount of contributions that can be made to candidates that are essentially in charge of awarding those contracts. So there are certain committees that are permitted to receive up to the contribution limits for contributions from business entities or key executives that make contributions. For instance, continuing political committees. They are not limited in the amount that can be received under the pay-to-play law, but they still have to be reported. So you may have contributions on the report if you're required to file the long form indicating you made contributions that do not prohibit or are not a violation essentially of the pay-to-play law, but they still have to be reported. The only things that now don't have to be reported, because it has been a change in the law, which is on the next slide, is that political party committees are no longer in the prohibition or limitation of contributions. So those contributions can be made to the specific political parties without reporting them. And so they're not reported on the business entity report, but the political committees are obviously obligated to report it, like we just discussed. Any of the other political committees would be required to report. So one of the other important things to know is whom from the business entities, any subsidiaries, any individuals that are officers, directors, are related to the business entity, where the contributions of those individuals then basically count as if they are from the business entity. So on the state side, there are, a list of folks that are included in that. So you have anybody that has a 10% or more interest in stock or assets of the company, anybody with control or indirect or direct control over the affairs of the business entity, directors, officers, those individuals that make contributions are counted as if it's being made from the business entity. So it's important from a compliance perspective to know in the business entity when these folks are making political contributions, where you may have to report them, even if it's not a problem for contracting. You may have to report them on the business entity annual disclosure.
I'm going to throw in another one that I know I've been asked. A lot of our service providers, the engineering firms, they have employee stock ownership programs, right? ESOPs, where a lot of times they might own more than 10%. Is the message to them then that they have to look at the books and say, and anybody that has 10% or more is considered a principal of the company, and
Correct.
they would have to report?
Right.
Okay.
Correct. Anything 10% or more. So that's one of the things that, even if it's, especially for, engineering type contracts that are awarded mostly probably fair and open, you're not prohibited from making these contributions. You just have to report them. So you have to be aware of them and make sure you're just, so that's, half the battle, essentially, that you're not in a prohibition, you're not violating any rules, but you still have to report everything. And then there are certain cure timeframes. So if a business entity makes a contribution, they have 30 days to request and get a refund of that contribution, if you're talking about state contracts. So if they made a contribution, they didn't realize it was a problem, maybe it was one of their key executives that didn't know it was an issue. If you request it and receive a refund within 30 days, it's as if it didn't occur. And for local and legislative contracts, it's 60 days, so your window is longer. The one thing to mention for state contracts, though, if it occurs within 60 days of the gubernatorial election, it's considered, you cannot do it. That it's an intended contribution, and it can't be cured. So as I indicated, some of the things that are different are the contributions of over $200 that are now required to be reported in detail, as opposed to the reportable threshold of $300. The good thing that occurred for businesses, essentially, is that the state law, it now controls, and they eliminated local ordinances that were also putting restrictions on businesses, all different ones, that they would have to then, certify their compliance with different local rules. That's no longer an issue. So now state law is the one law that controls this particular, area of law. The political party contributions, so contributions to them have been taken out of the limitations, and political party contributions can be made, and they do not have to be reported. And the exception for the fair and open process, eliminating the need for limiting the contributions if it's awarded through a fair and open process, has been extended across all state contracts as well as the local contracts. So those are essentially the differences that the ETA implemented in 2023.
Hey, Stephanie,
Mhm.
Stephanie, if I may, let me add at this point too. We get this question often from engineering firms or any company doing business with the state or local government. Since this is a federal election year, as I said earlier, we'll get a question. I just wrote a check, or I want to write a check to a congressional candidate. I want to write a check to Andy Kim's Senate campaign, or I want to write a check to Tom Kaine's congressional campaign. Giving at the federal level for federal candidates is completely beyond anything we're talking about today. You write a check to a congressman or to a Senate candidate, none of the New Jersey pay-to-play rules reach. Those are federal elections preempted by federal law, and the state pay-to-play rules, all the things we've just talked about, don't apply to giving at the federal level. So I want to make people comfortable if they've been participating this year for federal candidates. There are other things to talk about in terms of disclosure and the like, but the giving at the federal level doesn't trigger any of the New Jersey rules.
So there are also additional requirements on some contracts that involve the State Investment Council. So if there's any additional, if there's a business that's doing investment advising through a contract with the state, a lot of pension related business, those individuals are also regulated by the New Jersey State Investment Council, where they are limited to making political contributions up to $250 only to candidates those folks can vote for in an election. They can also make up to a $250 contribution to a political party committee. That also has to be reported to the State Investment Council. It's a report that has to be filed with them annually and pre-contract. So that's also something to be aware of. It's another regulatory arm of the state that essentially regulates, financial advising specifically. Anybody else have any pay to play related questions or thoughts when we move on to the changes related to independent expenditure committees and things of that nature that were created as a result of the Elections Transparency Act?
Stephanie, I have a question. I don't know if it's kind of at the intersection. So if you're going to cover it with independent expenditures and pay to play. So one question I've been getting a lot lately, and I really haven't been able to find a definitive answer, is how do you deal with independent expenditure committees, right, that are now registered with ELEC as like continuing political committee independent expenditures in terms of pay to play disclosures, right? Like I know there are certain, like for example, like I know a lot of my clients have been getting solicitations from Kitchen Table Conservatives, right, which is a independent expenditure only committee registered with ELEC as a CPC. So I mean, I don't know if this is the appropriate time for the question, but that's one thing. I haven't seen definitive guidance. I called ELEC. Nobody really knew the answer. So I feel like that's something I'm just curious what your thoughts are, because I sort of feel like it could go either way.
Right. I mean, honestly, that's a very good question. It's something they should probably address. Typically, if it's a contribution that's to a registered CPC, regardless of its independence, if it's a CPC and that's how they're reporting, I would think they are going to indicate that it should be reported. And since it's not prohibited or limited, I guess there's almost no harm in reporting it.
Mm-hmm.
So I would probably present it to a client that way. You're not going to have an issue by making the contribution. So then there would essentially be no harm in reporting it, except, and that's the problem with this intersection, especially. I wish I could give a definitive answer. If I was there, I would probably
No, thank you.
But can I just say, just a question along what Rebecca and Stephanie, what you guys are talking about. Again, we have a PAC. It's called Commerce NJ. It's a CPC. We've been told that if a company contributes $2,000 to our PAC, we report them as our PAC through our CPC. They're not obligated to do any kind of reporting. At least that's what we've been told. But it sounds like maybe that's not the case.
Right. So if in that example, if an engineering firm made that contribution to your CPC, they would have to report that on their business entity disclosure report in March, as long as they have government contracts exceeding $50,000 for a particular year. So that's when they would have to report it. Rebecca, that's what you're asking. If it were instead of so your CPC is not an independent expenditure only CPC, but as we'll discuss that's one of the options that groups or businesses can create, a CPC. So a continuing political committee that is either independent expenditure only or could just be a regular, for lack of a better term, CPC, where they make direct contributions. They can also make independent expenditures. But when they're in the category of independent only, they are permitted to take an unlimited amount of contributions as a continuing political committee, as long as they don't have the coordination and the consent of candidates, and they can do whatever activity they want on an independent basis. So when that occurs, is that contribution, since it's an independent only continuing political committee, required to be reported on the business entity disclosure report? Because technically they are registered as a CPC. So, I mean, that's your question. I think they would be under the strict reading of it. And that, that's why some of these groups, if they are only doing independent expenditures, it's something for them to consider as to whether or not they want to, stop being a CPC, transition to the new reporting committee, so that they essentially report less, if that's something they're interested in doing. And it also then eliminates a business entity's obligation, if it is an obligation, to file that.
Yeah, so it's kind of, and as you're talking, I'm kind of thinking about the questions I've been asked through the years. So the two triggers are, if you're an engineering firm, a contractor, even somebody that distributes materials to the state, right? You're under a contract. First question they should ask is it more than 50,000? Then second question is if you made any political contributions. If you didn't make any political contributions and you're over $50,000, I would imagine that ELEC, and a question I meant to ask is, does ELEC get a list of all the state contracts from the state that exceed 50,000?
No.
So how would they know that they're obligated to report that annual report if they made a political? Is it just up to the person that they should know the laws? I mean, talk to their attorneys and.
Right. Essentially, I mean, most of the folks in New Jersey are on the honor system. That's what I call it. They are, self-reporting. They're obligated to self-report. So the biggest, point of ELEC as it relates to the disclosure of this information is in fact disclosure, so that the public can see who's making contributions, who has contracts. If the public knows you have contracts, and looks and sees that you didn't file a report, they could request an investigation. Or you also have somebody that maybe wanted the contract, your competition, that you were awarded the contract as opposed to this other company, and they don't see your business entity disclosure, they're going to make an issue for you. They'll request an investigation with ELEC, and then they will look into it and see whether or not you were in fact obligated to file that report. So, and then you're subject to fines up to the value of the contract. Not to mention the potential breach of a contract if you made a contribution that was outside the limits or the parameters that the law requires.
Thank you.
So when businesses are considering how they want to engage in the political climate, essentially, and decide if they want to form a committee, if they want to raise funds in New Jersey, if they want to make direct contributions, if they want to spend independently. These are just some of the questions that, when I get questioned or called about what can I do? What can I do that's not going to get me into some sort of compliance issue with the state or government contracts, or even if there's no government contracts or they're awarded all through the fair and open process. What do I do and how do I do it? And these are some of the questions that I would ask. Like, what are you trying to do? Do you want to just make a political contribution to a candidate or committee? Do you want to spend independently? Are you more interested in issue advocacy, or do you want to specifically advocate or seek to defeat a particular candidate, and that you want to put communications out there related to that? So these are the questions that basically come into play to determine how these organizations should register, and if they do specific activity or do direct contributing, or to political parties, what their filing obligations might be and what their limitations might be. So the first option, as we kind of already jumped into slightly, is they could be a continuing political committee. So in New Jersey, a continuing political committee is a group of 2 or more people that want to raise money in New Jersey to make contributions or make expenditures for political purposes in New Jersey. So the thresholds for activity that then require registration and reporting on a regular basis will fluctuate every 2 years now. It used to be every 4 years. The Elections Transparency Act changed that to every 2 years. So in 2024, it's up to $7,200. So a group that goes over $7,200 in spending will then have to register, fill out a registration form indicating what their group is, who's in control of it, in anticipation of how much money they might spend and what their objectives are as a group. And then after that, they will report on a quarterly basis, and they have pre-election notice reporting that's required. That was also changed with the Elections Transparency Act. So in 2025 and 2026, the Election Law Enforcement Commission has already adjusted that and indicated that the threshold for requiring registration and reporting for those groups is now going to be up to $8,600. So it's per calendar year. So that's what it will be next year. The pre-election notices. So when you register as a CPC, let me go back. When you register as a CPC, it then gives the Election Law Enforcement Commission notice that you've opened a bank account, you're raising funds, and that you're going to be spending money. So then you are in the system of ELEC, where they are going to send you notices and different alerts that you have an obligation to file reports with them. So there is a certification you can file on an annual basis. Once you register, you have to file something every year. So even if you don't go over a certain threshold in a year, you still have to file something. But if you do go over that annual threshold every year, you're going to report quarterly, and you're going to continue reporting until you decide you're terminating, and you spend the funds, and you have to certify that you've terminated your account, and for purposes of your continuing political committee, you're not going to exist anymore.
So a question for you, Stephanie, and again, this is great, fascinating to me. Our regulated entities, right? The banks, the utilities, a lot of them have employee-driven PACs.
Right.
Would they be registered as a CPC?
Yes.
Would
If they
they?
have employee PACs, yes. Yep. So they would be subject to this reporting. So the other change under the Elections Transparency Act has been the pre-election notices. It used to be a 48-hour notice requirement, and it used to be a much higher threshold of when you had to report making an expenditure, receiving, making expenditures for purposes of the election, since we're talking about CPCs. So in 2024, so for the current upcoming general election, if a CPC is participating and they're making expenditures, either contributions or direct expenditures over $200, they're required to report these expenditures within 72 hours if they're 13 days to 8 days before the election, and then within 24 hours if it's from 7 days to the date of the election. And they are required also to report a cumulative 11-day report, so 11 days before the election. Any of these that went over that, they would put together a report and be obligated to report them. So restrictions on CPCs, unless it is an independent expenditure only CPC, the contribution limit is set, and that's it's in a couple slides, but for purposes of this conversation, a CPC can receive up to $14,400 in 2024, and that will increase, has increased. They've already said it, but it can't be taken until they get to the next calendar year in 2025. But that increased to $16,400 for 2025 and 2026. there can't be candidate involvement with CPCs. It's part of the prohibition for continuing political committees that a candidate cannot be in direct control over the spending of a CPC. So there's a lot of.
Okay, sorry. So if a candidate, how about if there's a council person on your CPC as a board member, you obviously they can be involved, but you just can't be involved with their election, basically.
No, they are not supposed to be involved with the spending of the CPC. They shouldn't have any direct or indirect control over the affairs of a continuing political committee.
So that
So
means if my PAC has an elected official on it, he or she should not be on the PAC.
they
Right.
could participate and they could be involved, but they can't have any control over how money is spent.
Okay. It's just okay. Thank you.
So with the new rules that were just proposed for independent expenditure only, well, independent expenditure committees specifically, it lists 527s under the IRS code, a 501c4, which are issue advocacy organizations, and 501c6, which are business organizations. When we talk about 527s, we kind of mentioned it earlier on. A 527 is a political organization under the IRS code, so it's for tax purposes. Like even political party committees are 527s essentially. So any organization that's organized for a political purpose is generally organized as a 527, a tax exempt organization. Now, how they decide to raise or spend money will determine what their filing obligations are, not just at the state level, but at the federal level as well. So when the New Jersey statute was changed and the rules are proposed now for independent expenditure committees, it will include an organization that raises funds in New Jersey that includes these types of organizations that are essentially created for making independent expenditures or electioneering communications. So they will likely have filing obligations for the state of New Jersey. They also might have FEC filing obligations if they are participating in federal elections, and certain entities might have IRS filing obligations if they aren't already filing with the state or the FEC. So when there is a 501c4 organization that is only doing issue advocacy, meaning are not making communications or making independent expenditures that specifically and clearly identify a candidate that advocates for their election or defeat, that's to the electorate, these are not required to be reported as an independent expenditure committee or to the FEC because they are not making political independent expenditures or electioneering communications. So an electioneering communication is a communication that clearly identifies the election or defeat of a particular candidate, or the functional equivalent, meaning there's no other reasonable interpretation of the communication and is made to the electorate within a certain amount of time before an election. So it's 30 days before a primary election and 60 days before a general election. So when you're talking about those communications, that is what is captured as an electioneering communication and an independent expenditure communication that then triggers the obligation to file as an independent expenditure committee, especially in New Jersey. So if there's a 501c4 organization that is essentially, organized to advocate issues, they are not required to report their contributors. They are not required to report their independent spending because it's not related to the election or defeat of a candidate that's identified.
So Stephanie, I'm sorry for all the questions, but this is good stuff. But why wouldn't I just be a 501c3 that deals with business issues like a think tank where we develop position papers and avoid the 501c4 status altogether?
So a 501c3 is a charity. So, but a 501c4 is the issue advocacy. So I think that would be your think tank type of thing.
Yeah, so is a think tank that presents papers to the legislature on a position like energy, would they be really not a 501c3, but rather a C4?
Yes, I believe so.
Okay, interesting.
And Anthony, in most instances, or I shouldn't say most, but many instances, those, you use the word think tank, typically have both the 501c3 and the C4. They have the C3 for those tax deductible contributions for purely charitable activities. But they also have a C4 because they then want to cross the line into advocacy, and they want to get close to that line in terms of influencing public policy, but without trying to elect or defeat anybody or question. So it's a very technical question. We can advise people they get that close about the C3 or the C4, but many of the people, many organizations I've worked for and worked with in the past and currently have both the C3 and the C4.
So Bill, so the state elect wouldn't care whether I'm a 501c4 or not, right? Or a C3?
Oh, certainly not. No, not at all. That again, that's more of a federal issue.
Okay.
Again, unless the C4 is
Political donation.
crossing a line into political activities in New Jersey.
Gotcha. Okay, thank you. Sorry, Stephanie. Sorry.
That's okay. So when we're talking about the newly created Independent Expenditure Committee in New Jersey, they characterize it as one of these organizations, a political organization under 527, a 501c4 or a C6, or any organization that does this type of raising and spending for the purposes of making independent expenditures, or these electioneering communications that we discussed. And the restrictions are, in New Jersey, they put specific rules, or propose specific rules that specifically prohibit, of course, coordination and consent with a candidate or a candidate committee or a political party committee. And they also restricted or prohibited direct contributions to any committee, candidate committee that has a contribution limit in New Jersey. So if they are a registered independent expenditure committee, meaning they can collect limitless contributions, they don't have a contribution limit, they are reporting in a limited manner, which we're going to go into in a second, they are specifically restricted from making any direct contributions, which would include in-kind contributions to candidates and committees. So that's an important highlight to the rules that were proposed in New Jersey, because that is definitely specific. In New Jersey, when you have a group, one of these organizations that's deciding to make independent expenditures and they're raising funds for that, they are required to register only after they've made independent expenditures or electioneering communications over $7,500 for a particular election. And they will have to register at that point after they've reached that threshold. They don't have to register before that, but they will have to register individually for each election they're participating in. So where there's a continuing political committee, you file your registration form and you occur in perpetuity, essentially, and you have filing obligations. In these instances, in these committees, will only exist for particular elections. So if you start raising money and you spend over $7,500, that's when you register. That's when you begin to report only contributions that exceed $7,500 in the aggregate per individual. You're reporting all the other funds that you collect, but not in detail with people's names or addresses or occupation and employer information. That's only being reported of contributions that exceed the $7,500 per election. And then you're reporting all independent expenditures in detail to whatever vendors, payees you have that you are paying to make the independent expenditures. And for specific elections, for primary elections, you're only reporting the 11-day pre-election report and then the 20-day post-election report. So you're filing 2 reports that include activity from the beginning of the year to the time of the election. And then for the general election or any other election, like a municipal election, a school board election, any of the elections that are considered general elections, they are the 29 days required pre-election, with activity beginning from the first of the calendar year to the 29-day. Then there's the 11-day and the 20-day post report. But you're definitely limited in what has to be reported by way of contributions, and there are no requirements to file pre-election notices like the 72-hour notices or the 24-hour notices. Those are not required by independent expenditure committees that are registered under this particular section and under these new rules. There's another category of independent spending that could occur where there's not a committee, meaning there's not 2 or more people that are organizing a political organization, where a business might just want to make an independent expenditure from their own treasury funds. In those instances, they don't have to register if they're not collecting funds for this purpose. They could just make independent expenditures, and they file their independent expenditure report on reporting dates for the election. And it's called an IND form. It's on ELEC's website. And all is required is if you spend over $200 in 2024 on a particular election, you report it, and that amount went up or is scheduled to go up for elections that occur in 2025 and 2026 to be $300. So there's no registration requirement. There's no, other reporting required, considering that you're an entity that's basically spending funds from their own funds as opposed to collecting contributions. So this pertains, the prohibited contributions pertains to, across the board contributions that are prohibited in the state of New Jersey and with the FEC. So foreign nationals are regulated by the FEC, but are also prohibited in New Jersey. In New Jersey, casino licensees and qualifying individuals that are key employees or shareholders of the casino licensee are also prohibited from making political contributions. And then you have the regulated industries, the banks, utilities, insurance companies that are prohibited from making contributions from their treasury funds. Those folks can make independent expenditures, like the slide before that we just discussed. And the contribution limits. So one of the newest parts of the Elections Transparency Act was the automatically increasing contribution limits and thresholds that will occur every 2 years. So previous to the Elections Transparency Act, contribution limits had not been increased in a very long time. Now they are set to increase based on ELEC's cost index analysis, and every 2 years there'll be a cost index report that will be released that will indicate what the next contribution limits will be for each election and each calendar year. So it's important to consider that, candidates run in elections and they are allowed to take the contribution limit per election. So the general election is separate from the primary election, just like a municipal election is separate from a runoff election. They can collect, up to the contribution limit that's set for that particular election, the year of that election, up to the contribution limit for each election. You have continuing political committees or political party committees. They are on a calendar year basis, so their contribution limit relates to the calendar year. So for example, if you have an assembly candidate that is asking you to make a contribution and there's no assembly seats in right now that are going up for the general election, so that's probably somebody that's running in 2025 or a Senate candidate that's running in 2027, the increased contribution limit already applies to them. That's adjusted already. So those limits are in the cost index report that's on ELEC's website, and you can see what those increased contribution limits are. If you're going to make a contribution to a continuing political committee or a party committee, those are set here for the 2024. In 2025, they've been increased, but those can't be made until 2025.
So Stephanie, with this one, because I know I was asked, so let's just say to your point that the elections are next year, but I'm already getting fundraisers for assembly candidates. It's, everybody's going to have to go through a primary theoretically, right? So there's two buckets here. There's the primary election and then there's the general election. Can I make a donation and be specific and say it's to their general election and not their primary?
Unless they have a separate account for their general election.
Okay.
You can't until after the day after the primary election.
But if they do have a separate general election account, you could make a check payable to that?
If they do, yes.
Okay.
But if they're running for the same office, they shouldn't. But the exception to that would be the gubernatorial candidates. They can have a primary election account and a general election account open. Now their contribution limit's different. It's up to $5,800 for the 2025 election. So that's set. So if any of those candidates said, hey, you could give me a contribution for both, and they have if they have two accounts open, they can take both.
Thank you.
In your experience, Stephanie, and mine, that's very rare, right? I can't even think of an assemblyman or a senator who has a separate a separate primary account and a separate general election account. Am I right?
Yeah, they should not.
Yeah.
I don't think there's anything specific that says you can't, but they should not. If they did, they wouldn't be able to transfer their funds to the next election from their existing account. So it's kind of counterproductive for them.
Right.
But for the 2025s that are running in 2025, the assembly candidates, and then 2027, the 2027 Senate candidates, for instance, we don't even know what their contribution limit is currently, because that's going to be adjusted in 2026 for 2027.
Right. Stephanie, we got about 5 minutes left before we hit 10 o'clock. So,
is this your last slide, Stephanie, or?
Yep.
oh, good.
So I always have a question, because I know so say people are collecting money, candidates, but then they decide to drop out. Where does that money go?
So it depends. If they are running and they collect money and they can utilize the funds after they drop out on any permissible campaign expenditures, any permissible use of funds. Specifically for the gubernatorial election, if you have a primary candidate that's also collecting general election funds, because they can do that, and they do that at times. If they are unsuccessful in the primary election, they are required to return those contributions.
So they're required to return those contributions to the contributor?
To the extent they have any money left, yes.
Oh,
and for the general election, if they're doing that and they have a general election account open before the primary election occurs, they're not allowed to spend any of the general election funds until the day after the primary election. So they should have most of the funds still. They should have almost all of it. And they are required to return that after administrative costs, which should be limited.
Interesting. Okay. This has been great. Fascinating. Does anybody, I don't know if you want to stop sharing the screen.
Okay.
And then we could always wrap up the conversation in 3 minutes, but yeah, so I know I get asked that question a lot in terms of where does the money go if a candidate drops out or if they lose. We were always under the impression that they get to decide if they give it to leadership, they give it to one of their other candidates that they support.
Right.
The important thing is I want to debunk is they just don't keep it for personal reasons, right? I mean, they leave the election, right? Okay.
That's prohibited. They are not permitted to no personal use of campaign funds. It will have to be utilized with there's 6 permissible uses, and one of them is making contributions to other candidates or committees, and one of them is making charitable contributions. So once if you're not an office holder, meaning you were unsuccessful or you just decided you weren't going to run, you're somewhat limited to your administrative compliance costs with ELEC, essentially charitable contributions or contributions to other candidates and committees.
Great. And I know Bill just put your contact information and his contact information in the chat. And again, what we're going to do is we're going to send this out to all of our members on Friday if they missed it. But any other questions for Bill or Stephanie?
Well, thanks,
not-
Anthony. Yeah, thanks for having us. We appreciate it.
Yeah, no, thank you, Bill. And good seeing everybody. And elections are right around the corner. So November 5th can't come fast enough. So